Did you know that there is a big difference between homeowners insurance and condo insurance? Well, there is a big difference, and there is a lot of different regulations and things that you should know and take in consideration when shopping for either a house or a condo. Hi, my name is Anna Smith and I am broker owner of Bluma Realty, and today we will be talking about the different types and regulations of condo insurance. And for that, I have brought my friend Christina with Castillo Insurance to explain to us the differences of all this drama of condo insurance, so she can explain to us in simple words so you can understand. Hi Christina, how are you today?
Hi Anna, thank you for having me.
Well, tell us a little bit about you, about your company, and then we'll go ahead and run into this drama of condo insurance.
Sure. Well, again, my name is Christina Castillo. I own Castillo Insurance Consulting. We're a small independent insurance brokerage where we like to say that we insure everything from your drones to your homes. We do residential, condo, renters, commercial, health, life, you name it, we insure it, except for travel. Love travel. We also pride ourselves on speaking 9 different languages because we want to educate not only our clients, but the community we live in a way they understand. Insurance has a lot of fine print and a lot of jargon, so we just want to make it easier.
Very good, and that is why I brought you today. Now, can you tell us how much different homeowners insurance is from condo insurance? Why does it sound the same, but it's actually 2 different things?
Well, because you're insuring 2 different types of, let's call them structures.
Okay.
Your homeowner's insurance is basically for your independent single family resident, while condos imply some sort of communal living, shared space. It could be a shared community pool, just like it could be a shared wall, a shared ceiling that might be somebody's floor above you, shared garage. That's when things become tricky, because in a single family structure, what's yours is yours and your responsibility. When it comes to communal living, you have to be very precise as to what is mine or what are my responsibilities and what is yours and what are your responsibilities.
Gotcha. Now, here in Florida, we have a lot of different types of property styles that fall under the condominium regulations. Like we have townhomes, we have villas, we have the garden condos, we have the high-rise condos. So we have a bunch of other stuff that actually have those regulations. Can you tell us what the difference are? Because depending on what kind of structure it is, there is different types of insurance within the same condo regulations. Can you explain to us those differences?
Absolutely. Now, a single family home or a homeowner's policy is called an HO3. A condominium style or communal policy is called an HO6, first off. So you always want to check the top of your policy and figure out what you have. They also include or detail very different responsibilities that you as the owner are taking or are insuring. In your single family home, you're insuring your roof, your walls, your floors, and everything that it encompasses. In a condominium, it depends greatly on what the association is responsible for, what you are responsible for, and this comes across on your condo docs. Your condo docs, and I know they're very, very, very long and thick. You want to look at the sections, especially section 5, that details unit owner responsibility versus association responsibilities. Now, in some of the homes that you mentioned, specifically townhomes, villas, some villas are connected. But they're not connected in the actual home structure. Sometimes they're connected in the shed in the back.
Okay.
Sometimes they're connected via a garage that's actually separate from the home. In townhomes, you can typically find anywhere from 4 to 8 units, where you might be the end unit, and which is very different from insuring a center unit where they are sharing walls on both sides. One of the big or easiest ways to tell the difference of the policy you need is look and find out if you're responsible for maintaining the roof.
Okay.
Your typical HO6 policy does not cover a roof. Right off the bat. If you're in a townhome and you're responsible for the roof, the windows, or the doors, make sure you're covered completely. Go for an HO3.
Okay.
An HO6, we were just laughing about it. An HO6, a lot of people think condo insurance and they think walls in only.
Okay.
Because typically you're not responsible for the outside structures, like I said, the roof, the outside walls, what have you. It's a little misleading, and I'll explain why. Typically, the association is responsible up until drywall. You are responsible for the paint and beyond.
Okay.
I have walked through homes that are condo units that were turned over from the association to the unit owner's responsibility after an incident that required a claim. I'll give you an easy one. I'll go with a kitchen. Kitchen fires are more common than you think. And when you walk into the kitchen after a claim that the association has come in, the association will repair the drywall. You'll get there. You're responsible for painting. You're responsible for fixtures. You're responsible for texturizing the ceiling, for the cabinetry, for the appliances. So anything that you had against that wall or a part of that wall is your responsibility from the drywall.
Gotcha.
You have to go even deeper because there's a common term that most people throw around with condo insurance called your walls in, meaning you're responsible for anything from the walls to inside of the unit. Except there's very specific terminology in the docs that point to unit owner responsibility, anything that services the unit only. So in the case of block on block condos, high-rise condos, even garden style apartments, which are typically only 2 stories tall, there are main pipes which come from the main water lines into that particular structure, give or take 8 units there.
Okay.
That main line in a 2-story building usually comes into the building, goes up, and then goes between the ceiling and the floor between the floor, the first and second floors. From there, it goes into what's called branch plumbing or pipes. From the main line, they have smaller lines that branch into each individual unit and then spread out from there.
Okay.
If something were to happen from, let's just say you had a line connecting your kitchen sink to your bathroom sink. Something got clogged, you had a leak, that is actually the unit owner's responsibility because it services only your unit.
Okay.
If the problem resulted from a backup, say, in the main line, that would be the association's responsibility because the association is responsible for the main line.
Wow.
Typically, an association tell you, look, call a plumber, have them determine what it is. If it's from the main line, we'll cover it. But each association is different. It's just typically how things are handled.
Oh, okay. Very cool. Now, what is a loss assessment? What is it and how does it work?
The legendary unicorn in condo insurance. Everyone's heard of it, but they don't remember exactly what it is.
I know, and this is one of those little, so important things that you need to know.
Exactly.
So people pay attention on this.
Yes, and it is my favorite. Please, if you have an HO6 policy, look for it. It's right there under part of your endorsements. It will say loss assessment coverage. And if you own a condo, you are very familiar with the term assessment. Especially those that come after another happy little word called special, meaning you just had a bill for something you did not expect. Yes, most HO6 policies, if not all HO6 policies, come with a special loss assessment coverage. It can range anywhere from $1,000 to $5,000. It's determined by the insured, so you get to decide how much you want it to cover. And in case you were assessed, you could file a claim and have your insurance policy cover that assessment. So yes, special assessments can be covered by insurance.
But it is an optional thing that the owner will have to tell you, hey, in the case of this, can I be covered?
I'll tell you the best case.
It's not an automatically thing.
The best case scenario to invoke that would be when an association reports damages or files a claim because of a hurricane. Now, in this case, a lot of cases, when an association suffers some sort of damage due to a hurricane, that damage or that deductible that the master policy has is then shared amongst all unit owners. That deductible could reach into the $20,000 range, sometimes higher. When that is shared, while you may not have suffered as much damage as, say, the building next to you or the community house or the pool, you are equally responsible to put into that pot, into that little, let's call it a bucket, just like your neighbors. So that's when I see a lot of people file that claim. It's unexpected. Sometimes it's a hefty sum. It's better just call your insurance agent, find out how much you're covered for and what the process is.
Gotcha. Now, can you tell us a little bit about why is it that the dwelling or the building cost to replace it is so much different from the actual insurance amount?
Sure. That's I get that question a lot. And it's typically the difference between market value.
Not the insurance amount, I'm sorry. What you paid for the house.
And it's a very common question in insurance, especially when it comes to condos, because you can purchase a condo for $250,000, and when you look at it, you're only insured $120, let's say, and that's simply because, again, your personal responsibility to that building, to that structure, is very different than cost. Also understand that we insure the structure, the replacement cost, what it costs to replace it in case of loss or damage. We do not insure market value. And you know as well as I do that if I were to take a condominium and put it on a beach, smack dab in front of the ocean on Clearwater Beach, the value of that condo is quite different than the market value. Quite different than if I were to take that condo and plant it on Fletcher in Tampa. It's market value encompasses. We don't insure land, we don't insure the market rate, we insure the structure. In the case of a condo, we insure floors, fixtures, appliances, everything in there. In response to a home, brick by brick, tile by tile, we'll insure that. We just don't insure location.
Gotcha. All right, and what is exactly a personal replacement cost? And what does it cover?
Personal replacement costs or personal property is typically item C on your declaration page of your insurance, and it covers. I like to paint a visual with this one. So let's just say you took your house, you flipped it upside down, and you shook it. Everything that falls out, except your car that's covered by a different policy, is personal property. So that means your refrigerator, appliances, TV, furniture, your clothing, every little thing that falls out is considered your personal property. Now you have two ways of insuring it. You can insure it for full replacement costs, meaning that you would receive the amount that it would cost to replace it. If you had a 54-inch plasma TV, what it would cost to replace your 54-foot plasma TV with an identical item, as opposed to actual replacement cost coverage, which takes into account depreciation, wear and tear, how long you've had it, the condition it was in, all of those things. So your outcome typically is very different from full replacement cost. So always keep that in mind.
Yep, that is very, very important. Now, you mentioned earlier something about the master policy. What is a master policy that people can understand, and why is that so different from your personal insurance on your condo?
Well, because we'll go back to the communal living aspect when it comes to condos. So again, your personal policy for your unit covers whatever you're directly responsible for. Now, the master association policy that associations have basically the same coverages, but it is for all the communal properties. So this would be all the roofs, all the sidings, the structural, the lampposts outside, the communal swimming pool, the gazebos, the barbecue pits, the tennis courts, what have you, that is shared. And because it is a shared amenity, it is also a shared responsibility. Everyone shares in the pot to replace or to pay for the policies that covers.
Which comes in where the people have to pay the HOA fees.
Exactly. It is
partially of that goes into the master insurance
covered
or master
by,
policy.
Actually, your insurance is the biggest chunk of your association fees yearly.
Yep. Now there is one last thing that I want to talk to you about. In the worst case scenario, we get bombed by God only knows, or a big hurricane comes in, or here in Florida we don't get earthquakes, but in the case that an earthquake comes in and destroys everything, when does the HOA come in place and say we're going to replace everything? So how will they play a part on the worst case scenario, and will they work with you, or how do they communicate with each other?
And again, your best friend in any association will always be your condo docs.
Okay.
Associations live and die according to their condo docs. There is another section, a little further on past section 5, which is titled In Case of Loss.
Okay.
And it details in separate sections what the association is responsible for in the case of a loss versus what the unit owner is responsible for in the case of a loss. Depending on the type of structure and specifically what those sections say, if say we were to have a hurricane, we're going into hurricane season. Right now we have a tropical storm hitting North Carolina sometime today. So that possibility, we're in there. Let's start counting how we get past it. If we were to get hit by a hurricane and say there was damage to 3 out of the 8 buildings in your association, roof damage, a tree fell through somebody's unit, a light pole landed in the pool, what have you, all of these would be covered by your master insurance policy, except the tree falling through the unit.
The damage to cost inside.
That is a split responsibility. Typically what happens there is your master insurance policy comes in first.
Okay.
They will clean up to a certain degree. They will then repair. And they will turn around and say, okay, in a week or a month, we expect to be done cleaning out this repair. We're going to turn it to your insurance company, and whatever contractors you've worked out with will then come and finish the job, pretty much like we said, from walls in. So when you walk in there, you'll see it. It'll be literal drywall with spackle and everything still on it. You'll see electrical outlets with no little casing on it, and a sink with no faucet. That is exactly how they leave it. I have walked into rooms where literally it's the concrete with no flooring attached to it yet. Looks brand new, like a construction site. And that's where your homeowners or your condo owner's policy kicks in, and it is now your carrier's responsibility to finish that out.
That's interesting. Well, folks, you have it. There is not just one cover for all condos. There's a lot of different things that you should be looking into. And then if, let's say that they have a question from something that you mentioned today, and then they said, oh, I need to look into that. If they're not a client of yours, can they come to you and say, hey, Christina, here's my policy. Can you see what I have, what I don't have? Am I overinsured or am I underinsured? Can we work something out? Can they come in and talk to you about that?
Absolutely. That's why we put consulting as part of our name. We are absolutely happy to sit with you, explain your policy. Even if you're not our client on that day, we still would love to explain to you so that you have the right coverage and you understand what's protecting what's important to you.
Now, if a brand new person, not a brand new person, but if a brand new homeowner has a lot of questions on what to get and stuff like that, a first-time home buyer. That's what I'm trying to get to. Can they come to you and say, hey, Christina, what would you recommend? Would you recommend this type of property compared to this other type? Or what are my options and what do I need to look for?
Absolutely. In fact, we encourage that because first-time home buyers, there's a lot of responsibility on their shoulders and a lot of I don't knows. And unfortunately, even in insurance, if you don't get certain endorsements or certain coverage from the beginning, you cannot get it afterwards.
Now, before I let you go, we are here in Florida. We have hurricanes. Can you talk a little bit about why is it so important to get coverage before the hurricane season starts, which is June 1st, or sometimes before June 1st?
Oh yeah, because like I said, there's a tropical storm out there right now and it's May. So yes, please, 40% of flood claims are made by people who don't carry flood insurance. People assume that flood insurance should only be purchased by those that are in flood zones. It's not true. I know areas in Tampa that flood in heavy rain and are not classified flood zones. West Chase is famous for them. There's a lot of places where, town and country too, just heavy rain like we had this morning, and you're driving through massive amounts of water.
Oh yeah, it's like driving through a lake.
Exactly. They are literal flood zones. It's always good to be on the safe side. If you're in an X zone, that means not requiring flood insurance. Flood insurance is relatively inexpensive. Do you know that there are some carriers that will throw in flood insurance for an additional $50 on a policy? Yes, ma'am. I work with a few of them that love to just bundle that in together, keep you covered, keep you safe.
For just in case the worst case scenario happens, so you are covered.
Because I will tell you, flood insurance doesn't just mean flood from a named storm. Flood in a homeowner's perspective or in the insurance perspective means any outside source of water.
Gotcha.
Could be a water surge, could be a broken main in the street, could be a busted fire hydrant in front of your home. If water penetrates your home from the outside, it is not covered by your typical homeowner's policy, but it is covered by flood insurance.
Very good. All right, folks, we can stay in here and talk about insurance all day long, and probably with Christina about 2 or 3 days. But at the end of this video, I'm going to put her contact information. I'm going to put in my contact information. So feel free to give her a call. Contact her if you have any questions. If you want to have a second look at your policy and find out if you are truly covered the way that you should be, and she'll take care of you. And for those first-time home buyers, it is a very, very good thing that she does, that she will actually sit down with you, or anyone in her office will sit down with you and explain you what to look for. So thank you for watching, guys. Thank you very much, Christina, for having me and for sharing with us all of your beautiful and extensive knowledge. And just keep watching our videos, and see you guys soon. Bye. See you later.